Hi traders and welcome to the Technical Analysis Market Watch on Friday the 29th of August. So I've seen another good week of moves on the key indices and some of the currencies, and we'll jump straight into the charts and see if we can identify any trades for today and early into next week. So we've got quite a broad range to cover today. So we're going to start out with the Aussie USD here, and we can see that we've seen a really good move over the last fortnight, basically coming off this support that we saw at around that sort of 64-cent mark. We've seen the higher low sequence, the lightning bolt that we're always looking for, has kicked in and it has broken through quite a bit of resistance through here. Now, right in its face is going to be all of these highs that we can see right through here. We've got a lot of rejection candles we can see here at around that 65-40-ish area, pretty much where it is right now. There is quite a bit to do. Like, you've got a lot of area here that we need to expose, and we've got these two rejection candles here as well. So if we do happen to get past this though, and we're trading above 65.50 all of a sudden, I think it really opens itself up to around that 66.20 as the next move. We've seen a really good momentum shift on this one anyway, so really it wouldn't be that big a stretch for it to see it break through this resistance. I'd be keeping an eye on the smaller time frames, and if we see a break of the smaller time frame higher low sequences, I'd be starting to look and target for that 66.20 as the next target for the long. If we do, however, turn around and feel the resistance and we can't break through, at that point, I'd be looking for a move back to the 20 moving average around that sort of 64.80 to 65 level. It's really scalping mode on the Aussie as it is right now, but still pretty good moves. The momentum has been building, no question, and yeah, a really decent chance that resistance might break through. All right, we'll move over to the dollar index now, and we can see a little bit of a flatlining effect in terms of what it's done over the last probably month. In terms of what it's done over the last month, you can see here that we've effectively flatlined between the 97.70 area and the high of 98.60, which is not a very big range, but the moving averages are completely overlapping each other. The 12 and the 26 to make up the MACD, we can see are effectively non-existent, so that means they're running parallel completely on top of each other. So that really speaks to what the market's actually doing, but the 20 and the 50 are also going parallel. Although they are separated, you can see that we're trading underneath the 20 moving average. That's going to be our key, I think. If we get a daily move above that 98.50 area and we're trading above the moving averages, I think there is a reasonable chance that we might see that breakthrough finally and start testing this 100.50 level that we can see at the red line there. But initially, we need that daily to close above this level here. We need a 98.50 close. If we do see weakness and we're trading under this 97.50 with a daily candle, then I'd start to look and think that maybe the long surge is over and we might be starting to look for a 96.50 move at that point. But right now, it's done a really good job of holding. We know there's reasonable support there. We're just looking for a break above that 20 and 50 moving average. Now that all the earnings are out of the way in the US, a lot of the bigger companies have all reported now. The market should start actually acting in terms of what the economy is actually showing, rather than actually waiting and anticipating results. So it's going to be, and the dollar index is going to lead that. So it's going to be a very interesting watch, but we do need to be trading above the 98.50 before we start to get excited about going long on this one. We'll move over to the S&P. Speaking of the US markets, you can see that we've effectively made another new high. It's been a week of new highs, really, but again, we can see the MACD is starting to definitely decline. There's no question here that we've got Class A bearish divergence over three peaks. We can see that it is still steadily dropping. It's only just creeping up to new highs. With all earnings out of the way now, if we were going to probably bust up higher, I get the feeling we might have already done it by now. So probably even a little shock move up, I'd still be very cautious about that. I'd be looking for trades probably on the lower side. There are definitely many parking spots to actually stop and get a trade in. We can see that we've effectively got a very strong support at 63.50, but 6,500, look, it's a new high, no question. There is resistance here. It's a bit of a watch and see. I wouldn't be jumping in and being too aggressive on long opportunities on the S&P 500 until we get effectively a breakout and then a retest of this zone. But knowing that we're going into what is traditionally a fairly weak month for the US markets, the S&P 500 in September is generally weak. It's been it's had a couple of weeks of weakness in the last 7 years. So there's no real reason to question that. So seasonality does play a part, there's no question, especially when the market's at an all-time high. So I'd be very cautious on the longs and be looking for opportunities to get shorting opportunities down to around that 63.50 and a break of that. And then we're starting to look at around that sort of 62.20 as the next target. So that would be the ideal on the S&P 500. All right, we'll move over to oil now. Now, oil's starting to actually show a couple of glimpses of a potential push-up. We can see that we bounced off that really strong support level quite nicely. Came back, yeah, it's probably a 50 fib if you measure that the point from that range. You're going to see a 50 Fibonacci there. So the pullback happened. 20 moving average is holding it down at the moment. However, we need to break past 65.70 to get excited about a long. But I think if we do, there's an opportunity to get up to around that 67 to 69 area in the first instance, and then we'd be looking at obviously the big push up to 72, but it's got a little bit of work to do before it does that, of course. But we can see already the resemblance of what could be a potential lightning bolt. All we need is a close above the 50 moving average and this area here. Anything above 66 would be very, very sufficient for that. And then I think we've got enough momentum to push up to at least that sort of 69, 50 area in the first instance, and then up to 72 if we get a break. If we fail to get a high here at this previous high and it starts to short below 64, I'd be starting to target that 62.50 as the next target zone for the short. So really, I'm not really biased either way on this one. I prefer it went long because we've got a lightning bolt, but if it fails to make a new high, that's telling us something as well. And yeah, looking for a low wouldn't be that big a deal on the 62.50 level. Over to gold now, and look, gold's had a bit of a breakout of the triangle that we've had in place. The symmetrical triangle's been in place for quite some time. It's times of uncertainty, gold generally finds its way. We've seen a very strong move over the last couple of weeks. We've broken above the range now. Look, in my mind, I think it's effectively, there is resistance here at around that call it 34.40, which is almost the all-time high. I mean, you can see that we've got a 35 or 34.95, nearly 3,500 level that did get touched only briefly before it did sell off. That is more than likely the target if we do get a little bit of movement from here. Though we've obviously seen some really good ranges. If you go to the smaller time frames, you're going to see series of higher highs and higher lows all the way up, all the things we talk about every week. So really, there's no reason to try and go against what is effectively a very strong trend. I'd be looking for the higher low sequences. Anytime we get a bounce off a 20 moving average, you can aim for the previous high in the first instance, and once that breaks through, just trade the higher lows off the 20 is generally the best way to play. The momentum is very strong. I wouldn't be looking at shorting gold now that we've broken through and on the upside. I think there's enough momentum to carry it through. It's had a really nice lever off the bottom of that triangle, really. So potentially all-time highs the target here. So pretty good trading on gold. A nice one, actually. We'll move over to Bitcoin now. Actually, Bitcoin is one of interest that has really been effectively a lightning bolt on the daily, has been in play for quite some time. We can see that. There's no question. Got the high, the low, the lower high, and now we've got a lower low. It's getting a 20-50 moving average cross for the first time in a very long time. The last time this happened, price was way down here at 94,000. So there's no question it's all but crossed right now, and nothing short of a $10,000 candle would stop this from crossing. So realistically, we're probably looking for shorting opportunities right now. There is resistance. It's a role reversal zone where it is at the moment. So it was support, which we would expect to be resistance now. It's had a little bit of a comeback off the lows at around sort of 109,000 really was the base that it got. If the 20 moving average starts to push down on it and we can't get past it, it's an opportunity to trade it back down to around that 109,000 in the first instance. And then after that, I would be looking for a low of around the 106,700, which is probably the more than likely the solid target. There is very strong support there at that level. But right now we can see lower high, lower low sequences on the daily, which is obviously quite a big deal. I'd be looking for a reversal. And if we see a series of lower highs and lower lows in the smaller time frames, aim for the previous low here at 109. in the first instance, and then once we break through that, you can look for pushing down to around that 106,800. I would treat them as separate trades though. I think in the first portion of that trade, I'd want to be going to the previous low because that would be the easier trade. We could get a little bit of a high up to around the 20 moving average if we see a bit of a resurgence in the next little bit, but more than likely I wouldn't be fighting this aggressive trend that is pretty strong on the way down. So interesting times ahead on Bitcoin. So now that a lot of the earnings are out of the way in the US, I think we can focus on where the market direction is going to be. Just be mindful that September is traditionally a weak month for a lot of these key instruments that we look at each and every Friday. So just be mindful of that when you're placing your trades, and maybe have a little bit of bias to the shorter ones if we get good trading opportunities and technical setting up. Have a great weekend, everyone, and I look forward to seeing you all next week.